Good afternoon, everybody. Thank you very much for joining us today for what is, I believe, the last panel on this stage. So we really appreciate you taking the time to be with us. The title of our panel is The Next Era of Global Financial Systems. And to discuss this vastly important topic, given the vast amount of change that we're seeing in the ecosystem, the new technologies that are emerging, the questions about geopolitics and resilience and cyber. I have a very, very learned and esteemed panel with me today to discuss. I will introduce my panelists and then we will stroll straight into the conversation. But before I start, I will introduce my panelists from this end and then we'll start the conversation from this end. So at the end, I have Glenn Kim, who is a founder, an investor, an advisor, and I'm sure he'll tell you everything else that he does as well in due course. Next to Glenn, I have Professor George Samakovitis, who is a professor of financial technology. Next to George, I have Inga Mullins, who is CEO of Fluency. Next to Inga, I have Janus Kizenevic. Thank you. Janus is the Vice Minister of Finance for the Republic of Lithuania. And last but not least, on my left, and I don't think I can move my chair back, apologies. I have Michał. Thank you so much for saving me from myself, who is CEO of the FinTech based in Poland called Zen.com. The next era of global financial systems. A financial system is actually made up of many, many different components. We can look at infrastructure, we can think about technology, products, the services. Within the ecosystem, you have banks, you have other lenders, you have borrowers, you have fintechs, you have regulators. And all of these are part of the jigsaw of a financial system, and then I'm sure our audience and our panelists may touch upon others. Within this panel, we're going to give our panelists the opportunity to raise the points that are important for you to think about as we consider the next era of financial systems. I'm going to start with the same question to each of my panelists, but then we will move across those topics that they raise and dive more into those in more detail. I'm going to start with Michał, and the opening question for each of you, from your perspective, given your background, given the work that you do, given the challenges that you face, what are the key ingredients and drivers for the next era of financial systems?
First of all, good afternoon, everyone. It's a true honor to be here today. Thank you for the invitation to the organizers. It's actually my first Davos, and I'm truly moved by the energy at town and the meaningful conversation that we are having throughout the day. I'm coming from the perspective of someone building and operating a digital payment global platform, not from the perspective of the policymakers. We have other experts here in the panel today. In terms to your question, I believe that the main ingredient in a financial segment is trust, and building trust is not easy. It takes a lot of effort from the organization, and what we see at Zen daily is that regulation is helping building the trust, but is not enough. It's not alone. It's an essential part that setting the bar and the baseline, and it's the starting point. What we truly believe at Zen is that the trust is built through the set of experiences, that the consumers understand payments and financial platforms that are easy to use, to understand, simple to use. They are transparent and very much predictable, especially when it comes to cross-border payments. We see a major shift towards moving away from single-purpose financial products into more integrated ecosystem, such as the one we try to build at Zen and give into hands of businesses, merchants, and consumers to connect them together within one simple-to-use unified platform for them to interact with a very seamless transaction flows. So I would say, to answer the question from my perspective, is continuous work towards building the trust with the consumers through the set of experiences. Trust is not just a slogan, but it's a way to build through thousands of small interactions with the customer.
Thank you very much for that. Janus, from your perspective, I mean, you're a member of the government. I'm sure you have similar views as well, but maybe a slightly different viewpoint that you'd like to share with us.
I totally agree about trust. Without trust, we can do anything, including this finance world. But I probably have very old-fashioned vision and old-fashioned understanding. But first of all, both traditional financial institutions and innovative institutions, neobanks, fintechs, all innovations, they first of all have to respond to client needs, both retail, customer, corporate, commercial. This is the main thing. That's why I'm saying I'm probably very old-fashioned, but I think this is something fundamental. Probably the best example, and I'm sitting close to FinTech guy, FinTech CEO, I have to say it's payments. 10, 12 years ago, main response to client needs was very innovative, instant, digital payment solutions. And of course, free of charge, because it was expectation from the market. Nowadays, it's not enough. It's definitely not enough, because not only because client is changing, but because whole reality around whole infrastructure, geopolitical as well, is changing. So it's time to move next. But to move next, to take another step, we need all these special ingredients, including trust, plus understanding, plus innovations, and also financial literacy. Last but not least, huge responsibility on governments, on the regulators and the ministries of finance as policy makers, because without responsibility, we can't expect any increase in financial literacy. So unfortunately or fortunately, everything is connected. And I do believe that by investing in education and in literacy, we will be able to move forward with the simple solutions and with more complex solutions, like, for example, integrity of single market. I heard about this a lot yesterday, I heard today, because this is huge stop. We are struggling with this. And that's why within European Union, we can't use this competitive advantage, because it's a blocking. We can scale up as quickly as we can. So this is something more complex. But I do believe that we still can move forward.
Absolutely. And just before I come to Inga, so the next era of global financial systems, from what you've said, are you looking for a pan-European? Do you think it's necessary to have a pan-European solution in order to be competitive?
I do believe yes, not only because I'm European and big fan of this region, but I do believe, again, as I heard many times here in Davos, Europe is still the best place to be, the best place to develop, to invest, to do businesses.
And we have very talented people here.
Exactly. In Poland, not only in Poland, in Lithuania as well. So actually everywhere in Europe. So this is the thing. But let's clarify, let's identify our really competitive advantages, and let's use it, because without actions we will not be moving forward.
Thank you for those. So Inga, key ingredients from your perspective.
From my perspective, and without repeating what fellow panelists said, definitely innovation and collaboration when it comes to this innovation between the governments, between the fintechs, and between the countries. We're looking at two different types of systems today. Those ones provided to retail customers and those used by commercial banks. So we need to find a layer how we will be able to provide these services to the end user. That will be much cheaper, that will be much quicker, and that will be able to provide different type of features. And in order for us to be able to do that, we need to work together. This is very refreshing seeing some central banks and governments being very open to new tools, such as AI, for instance, to blockchain, and being able to provide a coexistence of different assets. Some of the users in the European Union are very pro-crypto, pro-stable coins. Some of the others are very against this. I truly believe that in order for innovation to be able to be provided to the end users and those assets that the end users will be interested in, we need to find a balance and talk to each other. Thank you.
Absolutely, thank you. But
It's my turn.
please, George.
All right. Okay, so ingredients. I'm going to take a slightly different, angle and say I think the perception about the world of transacting should turn into thinking value exchange as opposed to money to payments, in the sense that we see all the more implementable and realistic use cases of RWA, tokenization, fractionalization. Of course, this is more of a regulatory and a legal question, but the technology is there. And just if I may, it's the first, I think, blockchain as a technology, it's potentially the first one we see in many, many years where the feasible precedes the desirable. We can do more with the technology than we're used to do in in the space of regulation, because it's embedding the governance, it's embedding everything. So it's like a total solution. It has been termed as the solution looking for a problem, not for a bad reason. So I would say that one is that change of perception. Think value exchange, not money exchange. That's one which is going to transform. The second one, I'm sorry, I have to steal trust. Trust, according to, if you take a definition, I really like the definition offered by Rachel Bosman. She said, trust is a confidence relationship with the unknown. And that is exactly what we need to establish, not only for the means of payment and the rails, but also the environment. And the third one is interoperability, and what I would call again, on the back of the new technologies that are available, what I would call embedded optionality. So the ability given to the end user, be it the retail customer or whoever the end user is, to choose their level of privacy, their level of anonymity. I'm not saying that it should be fully, it's a choice. It's building a layered infrastructure that would allow choice. I have more, but I will stop here.
Thank you. Glenn.
Wow, okay. Not wanting to repeat any of my other colleagues here. I was going to liken our conversation just before. I can remember a time, and all of you can remember a time, when you thought of going and getting money was simply a matter of going to a bank, you wrote a check or something equivalent, you got cash, and then when you return with that cash, you put it into a deposit account behind some steel safe or some very, very large protected area. And that was the trust issue. You trusted that that money that you have given, that you've earned and worked for, is standing behind this steel casing. Primitive, and by and large, when I grew up, every bank I ever saw had these big safes. And a lot of movies really talked a lot about stealing money from a safe. Safe crackers, I think was the term.
Use microphone.
Safecrackers was the term. But you look at it today, we live in a completely different era, right? One where that trust component is sacrosanct to having an efficient use of mobilizing your money. And we have more abilities to deploy our money than ever before. Whether it's, using Apple Pay, Google Pay, tap at POSs, all these forms exist. Back when I was referring to the safe, you really had very, very primitive uses, right? Because you could only put the cash in your pocket, right? So if you asked me now to add to the conversation as to what componentry would be important at this point, it's not, as you say, Georgios, there is tremendous amount of technology and innovation. The question has, the trust component is ultimately about the rules and regs, right? The rules and regulations will define and hopefully the perimeterize how innovation can be exercised by the general public. But even if you do that, you have to also educate, and this is your point, that without education, people will have choice without really the ability to have an informed means of decision making. So it's wonderful to have options, but if you don't know what your risks or rewards in using those options, it's sort of an option that goes unfulfilled. So I would say with education and then finding a platform around which the rules and regulations will enable innovation to be current, but not one that essentially breaks the trust that's already a major component of money itself.
Absolutely, thank you. So we'll continue with that theme of trust because I think it's a key topic, but let's put it in the context of what all of us in this room know today. Yeah? In many jurisdictions, there are no rules and regulations about digital currencies, stable coins, cryptocurrencies, whatever you want to call them. People use them. Now, if they use them, does that mean they trust them intrinsically because they're prepared to actually exchange their fiat money for these assets that they cannot touch, they cannot see? And we have rules and regulations. In Europe, we have MiCA, so we have a different perspective. So I think the trust is a really interesting one. And I use an example. Back in the day, I don't know, but you probably all remember, when we first started using the internet, and you had to sign terms and every time you logged in somewhere, you had to do terms and conditions. And there was a little sort of experiment run where one company in their terms and conditions put, and I will give away my firstborn child. Yeah? Everybody signed, everybody used. Because at the end of the day, there is this, I think, concept of trust, but also need and want. And how do you think that is going to actually evolve when we see all these different forms of digital money? That do you trust it, or you're just going to use it because you want to? And Inga, you want to come in there, so please do.
If I may, I think we need to divide the world into two. So we got the emerging markets where the legal tenders on national currencies are not as strong, and the government system is not as strong too. So you see an extensive usage of cryptocurrencies in those markets. And then we got highly regulated markets, including the European Union, the United States, and so on. So their needs are slightly different based on the trust in the government. In the end of the day, when we take mortgages, we take them in a fiat currency. I don't think that any of us today have a chance to have mortgage in a cryptocurrency. And then if your money gets lost from your bank account, who you gonna knock to? You're gonna definitely discuss this with your bank. So that liability, where the liability sits? With a bank, with a technology provider, with a FinTech? I think this is very important. So if people living in emerging markets do not have that trust in the system, do not have that trust in the government, in the policy, they will lose money anyway. Then of course they will be using cryptocurrencies. In terms of technology, however, there is that really thin line between anonymity and privacy, so trust. And I think that's also something that governments today take into consideration when they're building central bank digital currencies. Are we talking about anonymity of course, some of the people don't want to pay taxes. I don't know, taxi drivers, cleaners, and so on. They are not really into the concept of central bank, central bank digital currencies. But that's anonymity. Privacy, something completely different, and governments take this to consideration when building these technologies.
If I may, I would jump in here because we can obviously chunk the word trust into multiple thousands of ingredients and criteria. The way I see it, and I think I will build up on what Inga has said, I see it in three main areas. It's the resilience, the outages, cyber incidents, geopolitical shake-ups made continuity nowadays user expectations, not just the regulatory concern. I think it's a business issue, right? And the second would be transparency, which also was mentioned already. Not the things and hidden in the long terms and conditions pages, but very clear pricing policy and predictable outcomes. And lastly, I would say availability. So 24/7 financial service is not a premium feature anymore. It's a baseline. So if the system is not always on and not clear and not predictable, users and customers move on to the competition.
Please.
Can I think it's very much a matter of a perception of risk. How do we perceive risk? Because everything is nice using cryptocurrency until there's a major crash. The difference between something that's backed like a CBDC, a digital euro, digital dollar, whatever that is, it's backed by the sovereign, if I'm allowed to use the term, is there is a liability. Somebody used the term liability. There is a liability. Cryptocurrencies, on the other hand, are not a means of exchange, not a unit of account, not a store of value. They're not money. But just as Inga said, in a jurisdiction where things are a bit more, so people will take that risk, and this goes back to that perception of risk. So they perceive that I should take that risk because I would rather risk a run, a crash, than my money being lost because of something going untoward because of the state is dodgy, if I'm allowed to use the term.
The value of the legal tenders, the legal currency goes down.
Exactly, yes.
So, I mean, I think the concept, though, that it's key is it's all about being consumer-centric. The trust is about being, and when I say consumers, I mean businesses and everybody who use these systems, but it's about being mindful of who's using the systems. They need to have the confidence that if they make a payment, that money is going to flow and arrive in the timescale that they've been told it's going to arrive in, which for most of our domestic payment systems, when they're instant, is par for the course. Obviously, different challenges when we come to cross-border. But you touched upon something interesting. You also touched upon privacy and anonymity, two very different concepts. And obviously, not necessarily privacy, but our physical cash definitely gives us anonymity in that once we've paid it or used it, it's not traceable in that respect. And it's, I think, also important to note that when we make digital payments, data flows with those payments. We don't necessarily have privacy or anonymity with those payments today. And yet it's a key topic when we talk about the digital euro. If you think back a few years and there was the consultations and the key response as to why people were concerned about the digital euro was privacy. But yet every single payment that flows today, my details flow with that payment for whatever reason, because there's rules and regulations that require it. So privacy, I think, is a very interesting concept. And obviously then when you have something that is recorded on something that cannot be erased, it's immutable like distributed ledger technology, you then come into that sort of conundrum of what is the right benchmark for privacy, what is the benchmark for anonymity. Please come in and tell us, where do you, Glenn, would you like to start?
I was going to jump in and say that, so really your point was about perception. Right?
Because if I look at this audience and you look at this range of age groups, right, and you look at different countries, if you look at which countries, for example, in Europe, have the most cash usage versus those and others that do not. Right? And then you strike that in terms of what age groups, you'll find that there's a generation, I include mine, that are much more, have a strong sticky, so they're very sticky about holding cash. Right? They feel more comfortable having cash. But if you talk to my children, right, they're in universities, and they're perfectly fine using digital money. They're in fact perfectly fine never having cash. And for them, having physical cash is an encumbrance. It's a pain. And so this is a perception issue, because you're absolutely right. Your data flows with every transaction you make. Whether you're 18 or you're 78, it's the same transaction, right? It doesn't there's no discordance in this. So in a way, when you are talking about privacy and anonymity, a lot of it's also a perception issue by what generation.
Yeah, that's very valid, very interesting.
I would like to
Janus,
follow
yes,
up.
please
No,
do.
you touched. I have response actually to the question. I think, and it's a serious question and deep. I think that young generation thinks that secure, strong, safe infrastructure is given.
Yep.
They really, because they don't know what bankruptcy means, for example, when they don't know what to do when you can't take your cash. So again, and cash is not convenient. And that's why they don't challenge all questions about privacy. They challenge less questions about trust, because they think that everything is included in package, in value proposition. Let's do quick. So this is, I think, response to your very challenging topic and question about young generation mindset and approach to finance, to cash and cashless solutions.
I absolutely agree with you. And that's my point, is that you have a generation globally that is fundamentally trusts almost indirectly, may not even have made that choice. They simply grew up with that choice embedded.
Yes, exactly.
Yeah? And that is something they may have taken for granted. I mean, thankfully there haven't been phenomenal bank runs of late, right? I can think of 3 in the United States. All starts with an S, by the way. Signature, SVP. But apart from that, though, almost everyone still, it hasn't shaken, if you will, this generation's belief in using digital money of a form. Right? So I do think it's an age thing as well.
Yeah,
Just
just a
George come in.
very brief interjection, which is more of a technological nature, but I'm not going to go into details. The technology is there to have cryptographically signed transactions which are private. So what is being recorded forever is that a transaction happened between me and Glenn. It may have some indications about the amount, but it does not need, the sender does not need to share their information. The recipient does not need to share their information. And these are fully, they're atomic and they're fully implementable. So technically, we don't need, we don't need bank accounts. The account model is what we have inherited for Finance 1.0. It doesn't mean it's a bad thing. Custody is something that we crave. And even when you have self-custodial wallets, I can see a business model where custody services are coming as an overlay and say, we can take care of your money, don't worry. Because if I carry my money only in my mobile phone and I lose my mobile phone, then my money is gone. But they say it technologically can be done. That's what I'm saying. And I'm going back to the original point that the technology, the doable precedes the desirable. We can do more than what we have, but we need to get used to that. We need to find, the value propositions, the use cases for that.
Absolutely.
I think the technology, the financial systems are sometimes failing not because the technology is missing, but it's about the interoperability, about the number of rails.
Regulation.
Yeah, But again, going into this conversation, I think I see it as a choice, and complexity about different types of payments and different rails pushes the industry to offering the ecosystems with a variety of choices, and without pushing forcing the customers to pay with particular rail or brand or payment method, but to be able to choose. And this is about the perception that you
Hence
mentioned.
my note about optionality. You know that the user should be able to choose their level of privacy, what they want, and all that. You know, can be.
Is it not that
Sorry.
complexity is not on the front end anymore? It's more. It's more about plumbing. It's the settlement times, handling disputes, reconciliation, all this kind of stuff that users don't really see and don't really care. They just expect this to work.
And I think that's perception by region, because our perception in the European Union will be very different than perception in Africa or in Brazil, in Mexico, and elsewhere. So that perception changes, and the needs of certain features in the payment systems change as well. One of which is power outages. We don't even think about it until we have a situation with AWS in the US having a power outage, millions of US dollars lost. So as I can build up on what you've just said, Janusz, that's exactly what it changes. If something happens, then we think about it. If there will be a degraded environment in the European Union, I don't know, during a conflict between two countries, then we'll think about what type of features we require. What's trust for us? Who do we trust? Do we trust the governments, the system? Do we trust cryptocurrency private providers? I think that's very important to think of that. The global systems, the financial systems we talk about, they only not down to the European Union. They need to be really global, and they need to think about end customers in different jurisdictions.
Absolutely, and I mean, I'll raise with all of you. I mean, we have SWIFT, which is global. We also have challenges to that system in the making, and it'd be interesting if any of you want to bring those in. But we also have these new systems, these distributed ledger technology systems that are already global. I mean, just think about the furore that happened when Facebook launched. It was Libra originally, wasn't it? It sort of changed names on the fly. You know, a lot of what we see in innovation today and what is shaping the future is actually that point in time when it was brought to the attention of central bankers that actually somebody else can do what we do. And they can do it without our permission. And obviously then we've seen the trajectory of what happened there. But we do already live in a world where there are multiple global systems. And if we're looking to the future, do you actually think those are going to converge? Will continue on multiple rails? I mean, should we continue on multiple rails? So I know, Inga, you want to come in, but Glenn was just waiting, and then I'll come to you.
No, I was just going to say that there were lots of white papers on central bank currencies as more of a philosophical topic pre-Libra. So you can almost thank Zuckerberg for this, that with that event, right, it woke up a ton of folks to think about the possibilities of an e-euro, for example. Right? And then that then left, and many different outlets, but that also then created opportunities for this whole notion of stablecoins, right? Which then cropped up, which is now more recently codified in the Genius Act, right? Which is trying to address issues that people have around a regulated crypto. So all of this happened. You just reminded me that, yes, so there's one moment where an idea called Libra had essentially morphed into lots of different formats, all of which we're having debates about. Cool. And the second related one is the interoperability question that you had brought up, is exactly that point. To what degree will there be a bridge between rails, if you use stretching this analogy? And who will manage that, who will not manage it? And the related part of that will also be obviously the dark side of this, which is sanction avoidance, right? You know, to the extent that if you're anonymous, truly anonymous, then how does the dark money platform work?
If I could build up on that, actually we're in the situation of almost, I would call this bluntly, a Cold War, a financial systems Cold War. Because in the end of the day, we're talking about interoperability, but we got two different worlds right now. We got the European Union developing digital euro, which is planned for rollout in 2029. And we got the Genius Act and stable coins in the US, where CBDCs are banned from the agenda. So how these two very strong currencies in the future will be operating together? We're gonna end up with two systems. Yes, we got SWIFT, but SWIFT is this is not a national, I would say, international system at the scale of having all the assets at the same time, unless they will develop further the technology, I would say.
Well, they are just developing that technology to work on distributed ledger rails
Exactly.
and have a I mean, there's so much happening in this space.
Yeah.
That, you know, we've got this question about the next era of global financial systems, but I mean, this is a discussion that we could continue for hours because there's bits of the jigsaw, and I don't think there's anybody right now that maybe has a whole picture of what that jigsaw.
So the main question is actually what to do for all these digital types of payments to coexist within one environment and one ecosystem, right?
So I'm positive as always. So, but let's be honest, it works until it works. Yeah, so that's why do not expect that regulators will be fast in decision making. No, why? Why should they? It's about responsibility and liability. So the question is, what is the risk appetite of our regulators, main regulators, starting from the US, EU, Asia, and Singapore, Hong Kong? This is the question as well, because they have knowledge, they have understanding, and they have very smart guys in this, in central banks, in regulatory authorities. But the risk appetite can be very limited if something stops working. This is the thing.
Okay. I agree. I mean, going back to the original question, I think the best, and I agree that there is no, it cannot come from the regulators, but the regulators will respond to different options. I think the best way that this can work is if you have this. I think it's healthier for innovation, for development, and for the existence of the coexistence of multiple solutions. If we have a fragmented, in the nice sense, interoperable system. I mean, in the whole conversation, in the geopolitical mix, we forgot to add the BIS-based Project Agora and the digital Wang, and what happened with very recent announcement that they're going to do it yield-bearing, and they're going to give interest, and then there is Clarity Act, which is looking towards the same direction, and there is all that tension. But technically, I think it will work best if you have systems that talk to each other. That doesn't have to be. We can't. Let's agree that we can't have. The SWIFT is 50 years old. It's dying. Yeah. All right. I don't think we're seeking to build a new SWIFT. We're
SWIFT
seeking to build.
disagree with that.
Yeah. Okay.
They're trying. They're trying.
That's a lot.
Yeah. But I mean, let's just say it's as a Rails paradigm. It is, I think, becoming superseded by other more flexible and more accommodating solutions for multiple engineering and regulatory approaches.
And I think that comes to AI as well. We're talking about artificial intelligence, but there are risks of using it, especially in the financial services. At the moment, we are pretty much with centralized models. But these models, will they handle our liability if any data of our clients from banks will get lost? They will not. So who is responsible again? How can we decentralize AI?
Yeah, think self-driving cars.
Yeah.
People
People
would rather take, they're more comfortable. I heard that, I'm stealing that from another panel. I heard someone saying that people are are more comfortable to the human liability, even if that is the risk of injury is much higher. You have 90% fewer chances of an accident with self-driving cars, but people are not comfortable with how do you deal with the liability.
Yeah.
So, you know, it ends up there. It's a perception of risk. It's what others were saying in this panel as well.
Absolutely. But I think, I mean, we've obviously had some core components of trust, interoperability, privacy. We've touched upon anonymity and how that could look and feel and work. I suppose the question, there was a point you raised earlier about payment, or it should be free. When you have all these rails and there are businesses providing these rails, it might be free from me as a consumer perspective, but can it really ever be free? How does that actually...
No free lunches, so always someone should pay for this. So, but I also would like to follow up on earlier, actually, point in terms of AI. Unfortunately, here it's huge differences between regulated and not regulated markets. And this is the thing, because my feeling is that regulators will put very precise, a very specific list of products, services, and tech capabilities where traditional institutions like banks will have to follow. This is the thing. So even, let's take, of course, maybe JP Morgan is the best example. They really have money to invest into AI. But okay, but again, back to regulators. JP has money, but do regulators have appetite? Or they will be very strict with this? So, unfortunately, but we can expect different speed in these two regulated and non-regulated worlds.
I think some regulators are probably a little bit more warm up to AI than some others. Giving the example of the Bank of England AI consortium, where you got the cooperation between all those institutions you've mentioned, including JP Morgan, even London Stock Exchange, and Microsoft and the others, thinking how we can address the risks, how we can push the policy forward and make AI safe enough for financial services. AI for sure is a fantastic tool, but cannot be applied immediately everywhere. And it will take a time to get AI adopted. And I think some people expect, no, this is going to happen overnight. Let's look at digital assets. It's not happening overnight. Some of the jurisdictions, even more developed jurisdictions in the European Union, are still not there, not really into adopting stable coins in the European Union. How about AI? It will take a time. And the end users need to be aware of that. I think there is that perception, and again, back to perception, that everything will happen immediately because it's happening in the private sector. The public sector and the public institutions and those institutions that also protect us apply these things very differently when it comes to adoption because they got that liability for us.
So from my perspective, AI has obviously a great potential in financial industry, but I think that AI should definitely help us in decision-making process, accelerate decision-making and time to resolution, but the accountability, at least for the time being, should stay with people. They should have the responsibility for the final decision-making. The AI is a great tool for risk management, transaction monitoring, customer support, but at today's regulatory framework, I still believe that people should be the one taking the accountability at the end.
But yet I can think of a use case not too far in the future where you would say through a smart contract, paying 165 Swiss francs because she picked up my badge, for my secure hotel badge, only if she gives that, she leaves that somewhere. So there is a maybe it's a silly example, but what I'm saying is that agentic payments are, coming. The way that the modality where you will be able to instruct a payment to be done on condition in very much the same way as you ask ChatGPT today to do something for you. So that integration of smart contracts, and this is where I think the more of the monetization of the use cases is going to see a more immediate effect. This form of, as I said, well, I mean, I can't find a better term. It's agentic payments.
Yes. Yeah, we've got agentic payments on the agenda. We've got atomic settlement on the agenda.
Yes.
We've got smart contracts on the agenda, and all of these are going to come together. People cleverer than I am will probably figure out how it's all going to fit together. But there are very pertinent questions about responsibility,
Exactly.
liability,
Yes.
understanding. It goes to your point about literacy as well, as to when we make the most thing that most consumers do is make payments. There's lots of other financial services. But when we make payments, I very much doubt that most people actually think about what protection am I getting when I make this payment.
What happens if things go
Yeah.
wrong? It's again, the same liability question. What if my instruction to my bank that, do this, if that condition that I'm setting is misinterpreted, or this, you have to be able to go to someone and say, this is not what I meant.
And that's when we don't want agentic AI, because you want to speak to a person, not a bot.
So I was just going to add one thing. So for any of you in the audience who want an idea, everything you just heard in the last 2 minutes was about risk, right? What if something goes wrong? And then if it never goes wrong, great. But what if it does go wrong? Think of an industry that does that. Insurance. So think of digital assets. Is there a layer that will emerge on the insurance space? Because imagine all of us use forms of digital assets, right, going forward. In the old school way, we have, insurance in the form of, in the Americas, the Federal Depository Insurance Corp covers deposits. European Union, the same. But now when you push that boat forward and say, now we have other digital assets, right? And then you say, how do we distinguish in the choice between asset A, asset B, asset C? This one has insurance from a reputable insurance company that says that payment will be covered no matter what. That's a whole layer, right, that folks will probably emerge relatively quickly on. And it's one that will be addressed, because I can tell you for sure in the US, the insurance industry is trying to codify rules around how to insure digital assets in whatever form they come. And that could be in the forms of payment, in forms of recipients, in the way that insurance industry has always come. But they do not at this point have this.
This is actually a very interesting point about the insurance that you brought up, because from my perspective, the true innovation in payments is not about adding more technology, but about streamlining the decision making, right? Making it simpler, right? And making more transparent for the users. That drives conversion up, reduces the abandonment rate, and makes especially cross-border transactions more easier. But then the insurance could be a solution for that.
Which is where this is where private and public come into play, right? Whether, to what extent does government step in, right, to cover or back up a systemic institution, right? So, and that would potentially create a pro-cyclical problem. Alternatively, does an insurance company, in the way that it spreads that risk around, say, I will be the first layer, or the second layer, or whatever layer? Where will that go? And that would also contribute to people's comfort level, both. That's in the payment side, but also the other part, which we touched on here, was identity, right? Identity. Half of this promenade has companies on trying to preserve identity, right? Those folks are in the business of using AI to try to protect your identity and source. Has there been a cyber hack? Has there been a situation where your digital identity has been withdrawn? There will be a layer on that as well, where insurance will step up and say, you know what, I got you covered for a price, where up to X payments, I will ensure that if you use these rails, these companies, for this amount, you're covered. This will most likely evolve as well.
It's quite interesting to hear that the governments think about insurance of digital assets in the US, but they are not thinking about insuring AI models. Because what happens if one of these models goes offline? entire programmability of financial services, everything is that underlying the financial systems is gonna go down. What we've seen again with AWS just recently. Nobody thinks about scenarios like this in developed economies. And I'm talking about the United States, the European Union, and so on. Because we always think about offline capability as something that doesn't really concern us. No, that's for the emerging market. This is not gonna really affect us, really? What happened in Spain and in France last year? Nobody really thinks about it. And this is one of the risks. And one of the I would say capabilities of financial systems that are essential, because in the end of the day, from my perspective, offline is the new online. But regulators are not taking this into consideration this today. Maybe tomorrow insurance companies will insure AI too.
Janus, I know you want to come in, but Inga, just for the benefit of our audience, do you want to explain what you mean by offline?
Offline, I mean all the transactions that can happen without any type of connectivity. So no internet connectivity, no even mobile network connectivity.
So like cash, but in a digital world.
Literally, yes.
Janus.
I again liked your comment. So, and I really like to analyze insurtech companies, especially in comparison to fintech companies. And it's much more complicated to develop new product in insurance business rather than traditional finance business. So I think it's the only question is question about price. Because huge insurance companies, they're always happy to come to your home and propose, yeah, exactly, to serve. But it's a question about price. So who will pay? The customer?
A dear friend of mine would say, how much money will you pay me to make sure that you go to bed tonight comfortable in the knowledge that everything will be fine tomorrow?
Exactly. So it's about this.
Right?
This about this, yeah.
And there's a price for that, right? Or at least there's a sense that there is a price for that, so long as the trust that the insurance actually will be fulfilled, right? And that fulfillment has a price. And that's where I think a lot of people will be exploring what componentry within the digital asset space will they in sequence start to provide coverage for, right?
Just a build up on that, a short note. So in the end of the day, insurance companies will be here forever. It doesn't matter AI or no AI. So that's my thought listening to you, Glenn.
Absolutely, but we've taken a very interesting journey, ladies and gentlemen. I think it's all part and parcel of the conversation, because we've actually touched upon the fact that we have different rails on which financial services are going to be built in the future. We're going to have multiple rails. There is cost associated with that. Who's actually going to pay is open to debate. We could possibly see a world in which actually we pay for protection rather than just have it on a regulatory basis, so it's the same across the board. But then that raises a question of literacy and understanding, because the fact that we have inbuilt protections means that nobody has to think about it. But then we've also looked upon the topics of anonymity, privacy, interoperability we touched upon, and I think we agree that there will have to be interoperability. But then we've come across the fact that actually whatever we build, it's going to have multiple layers of different players in that ecosystem. And it could be the traditional players, it could be payment companies and fintechs, it could be digital assets companies, and it could be a combination of all of these. So there is actually, as it stands, and as we wrap up this panel, no actual one size that fits all, I think. And we all have a very interesting journey ahead of us in what is going to be the future of financial services. Ladies and gentlemen, I would very, very much like you to thank my fellow panelists, because I think they've provided you with some very fantastic insights. They've given you their private thoughts and their time today. And because I forgot at the beginning to introduce myself, I'm Nilixa Devlukia, and I'm EMEA advisor for the Global Blockchain Business Council. Thank you very much for your time and for being here.
Thank you.